If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. In today's episode, we'll be talking about NIO and the journey that they've been on as of recent. We'll be talking about the delicate balance of investing for the future while also making sure that the company stays afloat. Now, this is going to be a super exciting, interesting episode. So if you're new here, make sure you hit the subscribe button, make sure you hit the like button, make sure you click the notification bell icon and leave a comment down below. Your engagement really does go a long way in helping out the channel. Without further ado, let's get into the video. In May, rumors began swirling around about a fund coordination meeting at NIO. For many employees, this was deja vu, as in the later half of 2019, NIO had been in dire straits. And meetings like this were frequent occurrences as the company struggled to explain its financial needs and appropriately allocate resources. Fast forward to the future, NIO faces another crisis. Sales are plummeting. The ET5, once hailed as a potential hit, misfired, and the ES6 is getting a facelift. Monthly sales have nosedived by 60%, and at the time, the ambitious 10,000 units sold per month goal was nowhere in sight. But here's where it gets truly thought-provoking. NIO's business model is an intricate web encompassing 3 automobile brands: smart driving tech, batteries, chips, mobile phones, battery replacement services, the list goes on. These diverse operations have driven up NIO's R&D expense significantly. R&D and sales costs are over 10 billion yuan alone, and this creates a significant imbalance between income and expenses. Last year, NIO reported a net loss of 14.44 billion yuan, which was a staggering 260% increase year over year, and its cash reserves obviously evaporated rapidly. The company, it seems, at the time was facing a financial abyss. In times of crisis, there's a remarkable sense of deja vu. Employees worry about layoffs, and new projects face the chopping block. Yet NIO's founder and CEO, Li Bin, urges his team to focus on the project at hand, do things well, and don't think about the negative too much. But behind the scenes, it appears that Li Bin was scrambling for funds. A white knight arrived in the form of a Middle East automobile shipment. The move gave NIO some much needed flexibility, and with a 5.3 billion yuan contribution from the Abu Dhabi investors, things seemed to stabilize monetarily for the time being. But NIO wasn't just out of the clear just yet. The storm was far from over. NIO's bold strategy involved price drops, promotions. These things drove sales to 20,000 units in July. It appeared NIO had found a new way out of this crisis once more. But here's the thought-provoking question. Can such promotions save a company in the long run? The automotive market is fiercely competitive and capital is becoming defensive. Mistakes, even occasional ones, can be incredibly costly. Now let's ponder the role of long-term vision in business. NIO, like other innovative companies, has invested heavily in research and development. The company's goal is to create differentiation, control the supply chain, and gain negotiation leverage. But does this long-term vision come at a cost? The cost of addressing the market pressures and quality concerns. It's a challenge that many forward-thinking companies face. Can you balance your grand vision with the reality of today's market demand? NIO's founder, Li Bin, is often seen as a meticulous leader, prioritizing long-term value over short-term profits, delaying gratification. Yet the company's financial struggles persist. Is it possible that there's a fine line between visionary leadership and being out of touch with the present? NIO's journey raises a thought-provoking question for all of us. How do we navigate the intricate dance between our long-term dreams and the immediate challenges that we face? Can we truly balance the two, or do we risk stepping onto a tightrope? As we conclude today's episode, it's important to note that the path to success is never a straight line. It's a labyrinth journey filled with lessons, reflectionary moments, and challenges nonetheless. And with that, we leave you on these thoughts to ponder. That's it for today's episode of the Courtside Financial Podcast. If you found this interesting, make sure you hit the like button, make sure you hit the subscribe button, leave a comment down below, and click the notification bell icon. I seriously want to know what you guys think about the predicament that NIO's in today, continuing to raise capital, continuing to dilute shares, continuing to delay gratification in order to get to that future state that William Lee has envisioned for the company. Thanks again for watching. My name's Obi, and I'm signing off.